Very good morning, dear student. Hello, everyone. I, Dr. Jamal Abdul Nasir Ansari, Assistant Professor in the Department of Commerce, Integral University, is about to start a lecture on liquidation of the companies. So, a very warm morning to all of you. And in this lecture, we are going to study the concept of liquidation of the company. As you know well, the company is an artificial person created by law. Same way it is going to be destroyed by the law. It is even can't destroyed by the hydrogen bomb. For the purpose of this liquidation of the company, in this whole lecture we are going to study the concept of liquidation of the company. So we will explain each and everything here. What about its accounting treatment? What about its meaning of liquidation of the company, in what consequences, in what mode it can be liquidated, means the company can be liquidated. All the things we're going to study in this lecture. So as we know that a company is created by law, it is artificial person. There are a number of forms of doing the business. In the ancient time, people are also doing the business, and in the current time, still the business is going on, but in different form business are going on. For examples, a sole proprietorship business, a partnership business, a company business. These all are the various forms of business. A sole proprietorship does not have any rules and regulations for doing the business, for maintaining its books of account, especially. As far as the partnership is concerned, when the business is going to diversify, it have rules and regulations. For stand, Indian Partnership Act 1932. When a business is when the business activities are much more diversified in nature, it required a lot of factors. It required a lot of capitals. It required a lot of human beings to carry on to execute all the business process, all the business operations. So for the same business is going to convert from sole proprietor, from partnership into the company form. And when a company is formed, it has the legal backup. So in this lecture, we will going to study the concept of liquidation of the company, and why the company is going to liquidate, and what various modes a company is going to liquidate, and what will be the consequences of the liquidation of the company, and how the company can be liquidated, and what are the accounting treatments for the purpose of liquidation of the company. So before going to start the concept of this liquidation of the company, now just try to understand the meaning, definition of the liquidation of the companies. So as we have already discussed earlier, just right now, a company is an artificial person created by law, hence come to an end through the legal process only. Winding up a company is a legal process through which a company ceases to exist and finally dissolve. A company first liquidate and then wind up. So, as we have just right now discussed that it is the maximization and minimization is the universal phenomena of the world. From time to time, many of the companies come into existence every day. Number of startup India as well as across the world, companies are coming into existence. Same way, every day number of company liquidates. Maybe there are different backgrounds are there. There are different issues are there for the liquidation of the company as well as the winding up of the company. Some may be genuine, some may be not genuine. There are different backgrounds in respect of winding up as well as liquidation of the company. Sometimes it break the law, sometimes some ultra wires of the rules and regulations of the various act in respect of India as per the Indian Companies Act 1956, Schedule 3rd, Part 1 and Part B. Most of the companies, all the registered companies, all the domestic companies, all the Indian companies required to prepare its final account, means balance sheet and trading and profit loss account, to prepare in accordance the format laid down. So, conforming to Section 2, Subsection 94A of the Companies Act 2013, winding up of a company means winding up under the said act, or liquidation as per the Insolvency and Bankruptcy Code 2016. Means when we talk about the legal definition of the companies, when we talking about the legal definition of the company, we means here as per the section 2 subsection 94A of the Indian Companies Act 2013. It confirmed, it means, it said, it was laid down there. Winding up of a company means winding up under the act, under the said act, or liquidation as per the Insolvency and Bankruptcy Code 2016. Means a company is going to close its operation. All the business operation of the company is about to close down. This is called the winding up of the company. Means companies no more exist in the eyes of the law. So this is what the definition said under section 2 subsection 94A of the Companies Act. Winding up of a company means winding up under the said act, or liquidation as per the Insolvency and Bankruptcy Code 2016. It is the definition as well as the meaning of the winding up of the company. So here, modes of the winding up of the company. Moving to the next, after the meaning and definition of the company, the next thing is the what are the different modes of the winding up of the company, how a company can be going to liquidate. So under section 270 subsection 1 of the Companies Act 2013, winding up of the company may be voluntary, it may be by the tribunal. Means sometime in the eyes of the law, the said court ordered just to liquidate of the company. There are different background, there are different issues in respect of the binding of the company by the tribunal, and similarly there are different background for the voluntary winding up of the company. Means as per the Insolvency and Bankruptcy Code 2016, voluntary winding up of the company. Sometimes as per the willingness, as per the wish of the member of the companies or stakeholder of the companies, it is desire of the stakeholder of the company just to liquidate the said company on these base, on these fundamental, on these legal background. So the company is about to, the process of the winding up, the process of the liquidation of the company is started. So it has certain rules and regulations how a company going to liquidate, and ensure that all the rules and regulations are going to be followed while the process of the liquidation, the process of the winding up of the companies is going to execute. So we will discuss here what are the different backgrounds of the voluntary winding up of the companies, as well as what are the backgrounds of the winding up of the company in respect of the order of the court. So moving to the next slides, Just right now, we have told, we have discussed, we have seen in this, in these presentation, in this video, that the company is going to liquidate, going to wind up in many ways. Specifically, broadly speaking, there are only and only two ways through which a company is going to liquidate, winding up. The first one is the word voluntary, second one is the word tribunal, means by the order of the court. So here, as per section 271 subsection 1 of the Companies Act 2013, which has specified the condition whereby a tribunal may order the winding up of the company on the petition under section 2 subsection 1 petition under section 272. These are the various point background on which basis a company is going to liquidate. First point, if the company by a special resolution has to agree that the tribunal should wind up the company. In the eyes of the law, in the eyes of the court, if a company by a special resolution has agreed that tribunal should wind up of the company. If the court has agreed that by way of company's special resolution that this company is going to be must be wind up. So the first point will be the first background, the first base will be here that the company is going to wind up as per section 2, 271 subsection 1 as well as section 272. Following to the first point, first background, the first base, the second one is the where the company has proceeded in the opposition to the interests of the supremacy and the independence of the India, the state security, foreign affairs, public order, dignity or ethics. If in the eyes of the law, if the court think that in the interest of the India, in the state of the sovereignty of the India, supremacy and independence of the India, its state security, foreign affairs, for the public law and order, dignity or ethics, this company must be winding up. If a company start trading with the enemy country, India have a diplomatic relation with the rest of the country, and if India didn't having any kinds of diplomatic relationship or having any trade relationship, bilateral, multilateral trade relationship with any country of the world, and if any company, any Indian company or foreign company start violating the rules and regulations or the sovereignty of the India, the interest of the common people of the India. So it will be the base on which a company is going to dissolve, a company is going to liquidate for the sake of the interests of the common people of the Indian. So meaning by here, if a company start trading with the enemy country, for example Pakistan, that company will be going to liquidate, or as in the eyes of the law it thinks fair. Then the next base will be where on the request of either the registrar or any approved person by the central government with notification under this act. If the tribunal considered that the affair of the company have been run in a deceitful way or company had created for cheating and against the law or person responsible for its formation or managing its affair have been held guilty for fraud in the creation or management of its affair. So this point clearly that clarifies that the registrar thinks if it is a request of the registrar or the person approved by the central government that the company is companies must liquidate, company must close, this company must be wind up on different bases. In India, it was a very famous case, the liquidation, the winding up of the company, which is Kingfisher Airlines. The founder of this company, the promoter of the company, Kingfisher Airlines, Jamal, is declared insolvent, and the company, the process of the liquidation, the process of the winding up has already been executed. So everybody knows the Kingfisher Airlines, but today that entity is no more here in the eyes of law as well as in real operation. Similarly, one of the also famous case of Sahara India Limited also have been liquidated on different backgrounds. The process of liquidation has already been executed because I have a lot of debts, because I have a lot of issues with the stakeholders. The process of the liquidation of this company has been started. The next point, where the companies have failed to file the financial statement or annual return with the registrar for the period of the immediate proceeding preceding 5 consecutive financial years. This is the most genuine and most legal aspect of liquidation of the company. If a company within the stipulated time fails to file its financial statement to the registrar of the company preceding 5 consecutive financial years. So it will be the what the background, it will be the base of the liquidation of the company by the order of the tribunal, by the order of the court. If any company foreign, if any domestic company is registered in the eyes of law, means as per the Indian Companies Act 1956 base, but amendment from time to time like 2013, 2014, and some so on and so forth. So, if any company violates the rules and regulations, the society of the India, or fails to pay, fails to submit, fails to forward, fails to share the annual statement to the registrar of the company for preceding 5 consecutive years, so that the company is going to liquidate by the order of the tribunals. Why? Because company have ultra violated the rules and regulations. A company is created in the eyes of the law, as per the Indian Companies Act 1956. Same way, you have the company have to follow all the rules and regulations. Means at what time the company have to submit its annual statement to the registrar of the company and fail for preceding 5 consecutive years. So on this basis, the company is going to liquidate. Moving next basis, where the tribunal has agreed that the company should wound up justically and equitably. It is a perception, it is the views. If it in the views of the tribunal that the company must wind up justly and equitably, so the company is going to wind up. So these all are the various aspects or the various bases where a company is going to winding up by the tribunal, by the courts. So in our previous lectures, just right now I told you, I have mentioned, we had discussed here, there are different modes of winding up of the company. So first mode was the winding up or liquidation up of the company by the order of the court. The second point was voluntary winding up of the company. Here this name clarified that it is the will and wish of the company that the company is going to winding up of. Voluntary, not by the order of the tribunal or by the order of the court. So section 304 of the Companies Act 2013 stipulate that a company may be wound up on voluntary basis. Means if a company has passed a resolution in general AGM, annual general meetings, requesting that company to be wound up on voluntary basis by the reason of the expiry of the terms of its duration, if any set up by its article of association, or on happening of an event for which the article specified that the company to be dissolved. Means if a company has been created for a specified period of the time, for example 5 years, 10 years, if any company has been created, or for any specific objective a company has created, right, or for any act, for its duration, for specific acts or something else. So after this completing, after the achieving of this objective, the company is going to winding up on this basis. What it is not by the order of the tribunal, it is as per the voluntary winding up of the company, as per the achievement of the objective, as per the expiry of the duration of the company, or as per the objective achieved, or the expiry of the terms, or the voluntary basis the company is going to winding up of the company. So these will be what called the voluntary winding up of the company. And the next point, if a special resolution to voluntary winding up of the company has been passed by the members of the company, if the members of the company in the annual general meeting pass a special resolution to make its voluntary winding up, not by the order of the law, not by the order of the court, but it is as per the special resolution which is passed in the annual general meeting to the voluntary winding up of the company, that the company must be wind up of this. So these are the two various modes where the company is going to wind up. So when we're talking about the winding up of the company, it have a lot of legal consequences. It have a lot of bad as well as good consequences. If a company is created by the virtue of the law, a company is an artificial person in the eyes of the law. It has separate entity, means business and businessman. Both are the different things. For example, Reliance Company, the founder of the Reliance Company, Dhirubhai Ambani, was no more. But the company, the same company, is still running. The founder of the founder of the Apple company, Steve Jobs, is no more. But the same company is still going on, having the trillion million dollar of turnover across the world, and have a multiple offices, multiple regional country-wise offices across the world. So same way, it also going to wind up, it also going to close its operation in accordance with the law. Means lot of accounting treatment will be there for the purpose of liquidation of the company. So in the eyes of the law, as per the as per the Indian Companies Act 1956 base, 2013, 14, 15, 16, lot of amendment has been made from time to time. So for the purpose of the liquidations, in the same act, means Indian Companies Act 2013 have given the prescribed format. Following to that, company is going to liquidate. The process of the liquidation has been executed, and the number of document has going to be prepared. So first one is the what statement of affairs. So it is what whatever the companies are doing the business means having the lots of assets and liabilities, all the assets, all the liabilities going to record in a separate statement, and statements are prepared. What a different statement means subsection 5 of the section 272 of the Companies Act 2013 mandate that the tribunal admits winding up petition filed by the company only if followed by a statement of affair in a specified format. When if the petition for the winding up of the company is filed in the court by the company, the tribunal is going to admit only if the court is think that the statement of affair has been attached with the petition. So without these, without the, without prescribed format for statement of affair, the tribunal cannot going to admit the petition for winding up of the company which is filed by the Companies Act to the tribunal. So section 5 have confirmed of the subsection 5 of section 272 of the Companies Act 2013 has confirmed, had mandated that the tribunal admit winding up of the petition filed by the companies only if followed by a statement of affair in a specified format. Similarly, a statement of affair is a statement giving full details of the company's assets and as the liabilities. All kinds of assets, tangible, non-intangibles, current, non-current, fixed, livestock, preliminary, whatever the assets of the companies are having, all are going to record in a prescribed format its book value as well as its market value. Similarly, all the liabilities, current liabilities, long-term liabilities, fixed liabilities, short-term liabilities, whatever the different classification of the liabilities are there, all are going to be recorded. Right? The statement whose under which all kinds of assets and liabilities are mentioned is known as the statement of affair. So a statement of affair is a what? A full detail, it is a document giving, providing all the details of assets as well as the liabilities, whatever the liabilities, whatever the company is having assets. So this statement is the blueprint of the company prepared by the director, giving idea about the current status and the value of the company. When the petition is filed to the tribunal for the winding up of the company, so the tribunal will inspect that whether the statement of affairs has been attached or not. If all the things satisfied, then by the order of the tribunal on the particular basis, on a particular background, the company is going to wind up. Only if the tribunal satisfied the condition which was laid under the Indian Companies Act 2013. So the statement of affair is the blueprint, is rough sketch, is the road map of the company prepared by the director, giving idea about the current status and the value of the company. Means what are the value of the company, what are its various assets and liabilities, what about its realization value. All the things have been clearly mentioned in this document which is known as the statement of affair. It provides useful information to the shareholder, creditors and other interested parties as in addition to the detail of assets and liabilities and fixed or floating charges on them. It also shows value that could be realized by the selling assets so that it could be known what would be left after paying creditors and other liabilities. This statement of affair is the details roadmap, is the detailed blueprint where all kinds of assets, the realization value, the the liabilities, its status, and what about floating charges on various assets, what about the various liabilities, and what about the realizable value of the assets. So every single detail will be laid down in the statement of affairs. So a statement of affair will be prepared, right? Is a detailed blueprint where all the realizable value of the assets as well as all the necessary things has been mentioned. So it is a details of all the assets as well as liabilities, is a statement of all the liabilities as well as assets where the stakeholder can get the creditors means all the interested parties of the company could get no details of its assets, its liabilities, and they're expecting that what about the preferential creditors. We will go to in upcoming lecture. We will discuss more about these statement of affair. What are the different lists having the format two. So a statement of affair in a simple word we can say is a blueprint, is a document which which record the full detail of the company's assets as well as the liabilities. How the statement of affair is prepared? The next question is arise. The question is arise, is mandatory to prepare the statement of affair? Yes, of course, it is mandatory to prepare the statement of affairs. So, how a statement of affair is prepared? First, all the assets with no fixed charges are included at the value which is expected to be realized. The point to be considered here is that the cost in area will be included, but uncalled capital should be excluded. As in our previous lecture, in the lecture 1, at the time of starting up of the introduction to share capital, we have discussed, we have told you that a company share capital has been categorized in different way: authorized capital, subscribed capital, issued capital, called up capital, uncalled up capital, right? Paid up capitals. All the things we have already discussed in the previous lectures in lecture 1. So if there will be any kinds of uncalled capital, it is going to exclude while preparing statement of affairs. Secondly, the amount expected to be realized from the assets having fixed charge is to be compared with the amount due to concerned creditors. Having such charges, if the amount expected to be realized is greater than the claim, then it is surplus, otherwise deficits. In case there is a deficit, the amount is added to the amount of the unsecured creditors. After the preparation of the statement of affairs, the two figure will be leading. It may be deficit, it may be surplus. If the surplus will be there, it is going to add, right? So the total amount in items and the surplus, if any, in item 2 is available to the creditors other than secured creditors covered by a specified charge in item number 2. From the amount calculated in point 3, the following should be deducted in the order. First, preferential creditors for rates, taxes, salaries and wages, debentures and with floating charges, unsecured creditors. If the balance come out to be negative, it means there is a deficiency. Otherwise, the surplus for the creditors. Similarly, as we have discussed just right now, there are various classification of the list. A statement of affair consists of various lists. These are the classification of the various lists. So, just right now we have discussed the concept of the statement of affairs of the company. As I told you that the company, how it's going to liquidate, what are the various process, how a company is going to liquidate, what are the different mode through which a company is going to liquidate. So, for the purpose of the same, like a statement of affair is prepared. So, as of just right now, as I told you that if a company is going to liquidate, so it's have to follow the certain rules and regulations. If a petition for the purpose of winding up of the company is prepared for the purpose of the winding up of the company, if a petition is filed to the tribunals, so it must have, attached a statement of affair, and it's have various impact and how a company is going to paper statement of affairs. It is a document which show all kinds of necessary things, all kinds of necessary assets as well as liabilities, how a company is going to prepare a statement of affair. So for the purpose of the same, a statement of affair consists of various lists. For example, list A mentions that asset not specifically placed means all the asset as, as in the prescribed format, all the assets which have been prescribed means assets having specifically not placed is going to record in the list A. Same way, list B talk about asset specifically placed to the creditors fully or partially. Means list with the assets which having the pledge specifically to the creditor fully or partly secured. It is going all those assets having the pledge going to record the list as per the list B in the prescribed format given by the Indian Companies Act 2013 in different sections. The statement of affair is prepared, and this statement of affairs having lot of lists. So list A talk about assets not specifically pledged, list B talk about the asset specifically pledged to the creditors fully or partly. Same way the list C is also there. List C talk about the preferential creditors for taxes, rates, salaries or otherwise. So the list C have given the detailed pro forma how the list C will be prepared. The Act 2013 means Indian Companies Act 2013 prescribed the pro forma how a list C will be prepared, like preferential creditors, taxes, rates, salaries or otherwise. Meanwhile, the list B is also prepared. The list B said that the list of the debentures holders with floating charges. List A talk about the unsecured creditors. A detailed pro forma for the preparing list E was mentioned. List E unsecured creditors. Same way, the list F list of the preferential shareholder. List G talk about the list of the equity shareholder, and after the preparation of the all of all the list. If there any kinds of deficiency or surplus, means like list H, deficiency or surplus account, means form 57 of the company's court rule 1956 said that if any kinds of deficiency or surplus will be there, it is going to record under the list H. So moving in this direction, in the same flow as we're talking about the liquidation of the companies, right? So the format, the Indian Companies Act 1956 base, given the format of how a statement of affair is prepared. So for the sake list A assets not specifically pledged statement of affair list A. It is a pro forma given here, right? So statement name of the bank, state name of the bank, full name and the nature of the property, its book value in the rupees, paisa as well as estimated to produce rupees as well as paisa. Means what about the balance at the bank? The first point, which is assets not having specifically pledged, right? The first is the what? The bank, the balance at the bank, cash in hand, marketable securities, bill receivables, trade creditors, loans and advances as per schedule 3rd, as per schedule 4 2, as per schedule 1, as per schedule 4, unpaid cat calls, as per schedule 5, stock in trade, work in progress, freehold properties, leasehold properties, plant and machinery, furniture, fitting, utensil, all the things are clearly mentioned in the statement of affair as per the list A, means assets which is not specifically pledged. Patent, trademarks, investment other than marketable securities, livestock, vehicles, etc. Others properties. So these all are the various properties, various assets which is not pledged as per the list A, going to record in the list A of the statement of affair. The format of the statement of affair as per form 57 of the company's code 9 rule 9 1956 1959, it clearly mention the performer for the statement of affairs. Similarly, had just right now told that statement of affair have different list, different list A, B, C, D, E, F, G, and so on and so forth. So list B top assets which is specifically pledged and the creditor fully or partially secured. So not including debentures secured by the floating charges. The name of the secured creditor are to be shown against the assets on which their claims are secured, numbered consequently and arranged in alphabetical order as far as possible. So a statement of affair is to be, it talk about particulars of the asset specifically pledged, date when the security given, estimated value of the security, name of the creditors, address and occupation of the creditors, amount of debt, how much the debt has been taken against of these assets. Meanwhile, the amount of the debt when contracted, consideration, balance date, unsecured, and so on, so forth. So as per the list B, in simple word we can say all those assets having the floating charges, the pledge against of that mentioned assets fully, partially are going to record under the list B, which is titled as asset specifically pledged and creditors fully or partially. Similarly, we had another list statement of affair given other list which is known as the list C, preferential creditors for rates, taxes, salaries, wages, and otherwise. The name to be arranged in alphabetical order and numbered consequently means statement of affair as per the list C. It said that the name of the creditors address and occupation of the creditors, the nature of the claim, period during which claim accrued due, date when due, amount of the claim, amount payable in full, balance not preferential carried to list E. So list C talk about, in simple way we can say, list C talk about all the preferential creditors to whom the payment have to make on priority basis. So as per list C, all kinds of preferential creditors for rate, taxes, salaries and wages and otherwise going to record. Same way as per list D, list of the debenture holder secured by the floating charges, the name to be arranged in alphabetical order and the number consequently. Separately, list must be furnished of the holders of each issue of the debenture should not more than the issue having have been made. So, statement of affair D, statement of affair as per list D, name of the holders and their address, amount, description of the assets over which securely extend. So as per list D, all the things have been clearly mentioned. So moving ahead in this direction, as I told you, list B, right, list of the debenture holders secured by the floating charges and so on and so forth. Moving in this direction, the statement of affair is further said that the list E, which talk about the unsecured creditors, the name to be arranged in alphabetical order, numbered consequently. Statement of affair list E, the total amount of the claim less contra amounts means no such set off should be included in Schedule 1 attached to List A. The name and address the name and address and occupation of the unsecured creditors, amount of date which contracted, folios of the ledgers, consideration, all the things, all the details of unsecured creditors are mentioned in the list E. Similarly, list F talk about list of the preference shareholders, means the name of to be arranged in alphabetical order and the numbered consequently. Statement of affairs, this is basically talk about list F talk about the details of preference shareholder, means consecutive number, registered number, name of the shareholder, address, nominal amount of the shares, number of the shares held, amount per shares called up, total amount called up, means details about the preference shareholder is mentioned as per list F, means details, whole details of these preference shareholder is mentioned in this list F. Similarly, list G talk about the list of the equity shareholders, means that list arranged in alphabetical order and number consequently, means statement of affair list G talk about the consecutive numbers, registered number, name of the shareholder, their addresses, nominal amount of the shares, the number of the share held, amount per share called and total amount called up, capitals. So statement of affairs provide these are the various list A, B, C, D, E, F, G and finally the list H, means deficiency or surplus. It talk about, it said it's clarified that if there are kinds of deficiency or surplus, right, after all kinds of realization of assets, all kinds of the liabilities, if will be there, it is going to record under the list H of the statement of affairs, which talk about the deficiency or the surplus account. So statement of affairs talk about the forms of deficiency or surplus, item contributing to the deficiency. So it is the detailed list of, it is a detailed items of the list of H deficiency or surplus. We talk about what are the various items contributing to the deficiency or reducing surplus. So in the upcoming lectures we will having the numericals, a practical illustration on the same topic, list H, deficiency list A, how it is going to be prepared, what are the points should be kept in mind while preparing the statement of affairs. Means every details we will going to study in the upcoming lecture. So the statement of affairs, it consists of various list A, B, C, D, E, F, G, H, right? So, other point of the discussion is the what receipt and payment account, right? Means is what it this format is clarify that what are the receipt and what are the payments of the liquidation of the companies. Means the name of the nature of the winding up means it is voluntary winding up, or the first point here mentioned the nature of the winding up of the company means it is the what voluntary winding up of the company, or it is a voluntary winding up of the company, or it is a by the tribunal. Date of the commencement of the winding up of the company means on which date that company has been started means executing its winding up of the company. Date to which the account and the statement are made. Name and address of the liquidators who have been appointed by the central government of India, right? Means the liquidator of the company, liquidators account of receipt and payment, and the statement of the position in the winding up. So the account of the receipt and payment, receipt it have two sides, it have multiple column. First side is what known as the receipt side, second side is known as the payment side. The date on whom received, nature of the receipt, from the mentioned from the said parties to whom you have received mentioned there, and to whom you have to make the payment, from whom you have received, it should be recorded in the debit side of these receipt and payment account, to whom you have made the payment and what is the nature of the payment and what about the amount of the payment. It has to be mentioned in the payment side of the receipt and payment accounts. So moving ahead in this direction of the liquidation of the company's statement of affairs. So the format of the deficiency as well as list H has been mentioned once again. Item increasing deficiency. So these are the various items which have increased the deficiency. Capital, for example, liabilities in excess over assets as per the balance sheet. Declared not dividend and bonus for the period. So by way of these deficiency and also be increased net trading losses for the period after charging depreciation, taxation, interest on debentures, losses other than the trading losses, writing off, for example, or providing provided in the books over the period, estimated losses written off, or for the which the provision was made to prepare the statement, or any other item increasing the deficiency in the statement of affairs of the company. So if there will be any item which is going to increase the deficiency, it should be mentioned under the list H of the statement of affairs. Item decreasing deficiency, the first item is what assets in excess over capital and the liabilities as per the balance sheet. The first statement going to decrease the deficiency of the company. Net trading profit during the period, profit and incomes during the period other than the trading, and other items reducing the deficits. So after this statement of affairs as per list H, which talk about the format of deficiency and surplus was given. So moving ahead in these directions, this is all about the liquidation, a small lecture, a small presentation on winding up of the company, the liquidation of the company. If you have any kinds of query, doubt, confusion, you most welcome at any time. You can write to us at 7618057190, official WhatsApp number. And in the upcoming lecture we will having more and more practical aspect of this liquidation of the company, how the process of the liquidation is executed, how what about its accounting treatment, and from the economic point of view, from the business point of view, from the legal point of view, we will going to discuss in the upcoming lecture. So if you have any kinds of questions, which is any doubt which is not yet clear in these lectures, so you may contact to us like personally on the mentioned lecture. So if you thank you so much for these watching videos presentation. From the deep of my heart, I would like to express my sincere gratitude to the Center for Distance Learning Integral University for giving me a chance to make a video on the same topic. Right? I also say thanks to the founder of this university for providing employment opportunities there here, and also thanks to the audience of these video, right, who for their patience listening, for their patience, all these things. So thank you so much from the deep of my heart. If you have any kinds of questions, query, you are most welcome at any time. So thank you so much for watching this video.